and Keith Fitzgerald. So, Rebecca, ladies first, the Dow and S&P and NASDAQ seem to be unfazed by the threat of tariffs on Mexico, Canada, and China. Should we be worried?
Well, I mean, I think that a lot of Trump this is a lot of political leveraging, right? He is literally saying, hey, I'm going to come in, I'm going to do these things. And he's already getting foreign leaders, to your point in the last segment, to call and say, hey, let's stop. Mexico, obviously, their largest trading partner is the United States to the north. And if they're letting all of these migrants through, President Trump elect Trump is basically saying, hey, we're not going to have that. And it's going to be effective. Whether or not, Ed, it actually gets implemented and how it will actually affect policy is a whole nother thing. But I will say that I think that the bond yields have definitely come down because all of the people that Trump is really nominating to be on the economic front are really hawkish, and they're definitely deficit, hawks and cutters. And so you're seeing that definitely affected on the risk of our yields are coming down. And so that's really been interesting.
Interesting. We'll move into bonds maybe. So, Keith, it is probably most likely we'll see China will get a tariff imposed. President Biden secured commitments from China to stop the export of drugs that make fentanyl into Mexico. Now, those commitments were largely ignored. So does a 10% tariff by the U.S. on Chinese goods hurt the U.S. or China more?
That's a very, very sharp and tough question to answer because China is going to do what China does best. They're going to find a way to circumnavigate the rules no matter how they're put in place or where they're put in place. So if they can't get into the U.S. directly, they're going to find another pathway, just like they did with nearshoring through Mexico in the first place.
Right. Right. So, Rebecca, President-elect Trump used tariffs effectively in his first administration. You remember the tax that France wanted to put on all the earnings of the American tech giants, even if those earnings were not made in France. And then the President Trump announced he would tariff French wine. 100%, I think is what he had said. And France quickly dropped that tax proposal. So he's using the might of the American consumer, which no other country can compare to, right?
Yeah, absolutely, Ed. And there's a lot of things that Europe is doing that has already passed. They passed a bill in May that actually will change global multinational business corporations and their supply chains towards green energy. And it affects every single multinational corporation that has sales of a certain level and above. So it affects all U.S. corporations. So we've got a lot of things that this president needs to come in and attack head on. The Biden administration was all about this European plan because they are all for the green energy. And they think, hey, let's say it's someone else's fault. And so we'll go along with it. President Trump has got to come in and attack what is going on at the UN and the EU because they are trying to force multinational American businesses like Apple, like Microsoft, and all these things to completely change their supply chains from the upline and downline to be totally green. This will be a huge infrastructure cost. This will raise the cost of goods and will change everything. So we need Trump to get in there and we need him to get going on this. This has really been bad under the Biden administration.
That's interesting because the President Trump, under his first term, wanted to get to a trade deal with the EU. He likes the country-to-country free trade deals, and he didn't get to that. So maybe that will happen in this term. Keith, I want to get a little more technical question for you. Our economy is in a different place than it was 4 years ago. So could we see a different price reaction and then maybe a pullback of the consumer if the tariffs are imposed as a result in 2025?
Well, it's very definitely possible that that's going to happen, and you've got to be leery of painting everything with this same brush because there are very clearly segments of our technology, segments of our healthcare industry, segments of AI that are moving forward no matter what happens. So if you're an investor, you've got to look for those pockets of strength. It's very tempting to be an economic bear, but when in fact you could be a market bull. So there's very much a split dichotomy coming up.
Right. Keith, Rebecca, big market brains. I appreciate it. Thanks, guys. That's great. Great to meet you. So new signs that Israel Hezbollah